Hi, everybody. Welcome to another Trading Wars live session. I'm going to just check the audio to make sure we're okay. And then we're going to get started. Just check the audio to make... Okay, looks like we're good with the audio. I see we have a couple people in here, so thank you very much for joining me. I know I've been kind of under the weather the last few weeks, and I'm still battling a cough, so forgive me if you hear me coughing in the background. So I want to start off by looking at futures and then looking at some stocks and different swing trade setups. And then from there, taking any questions if you guys have any questions. All right. So first of all, we had the Sunday open. And the Sunday open, so what I'm going to do here is I'm going to go to weekly chart. And on the weekly chart, I'm going to draw last week's range. Okay. So let's just draw last week's range. So the high was 41.2150. So let's just bring this up here and then just put that in. And let's put the low as well, which was 40.21. So that's about 100 points range. And then we're going to go on to the hourly chart and talk about the setups and what happened so far. All right. So in the actual setups here on the hourly, you could see on Sunday that we actually opened inside of the range of last week. So here's last week's range. So anytime we open inside of the range, there is going to be a little bit of choppiness, consolidation before we eventually pick a direction. And as you can see here, we hovered near last week's high, and the bears tried to double top. You could see it here that they tried to short it multiple times until finally they threw in the towel, right? So what I'm seeing here is I always use the Fibonacci and draw it from the most recent swing low and to the swing high to give me my anchor points. And as you can see here, we had this move from 40.81 to 41.27. And then earlier this morning, we pulled into about the 50% retracement area. So this is a major pivot. As you guys know, the Fibonacci, the 50 and the 618 are the two most powerful areas. And from here, we had a measured move extension. And as you guys can see here, we actually traded to the 272 extension pretty perfectly. And from there, we are now pulling back. So far with the market, we can say that we've had a very textbook type of market right now. And we're trading to a lot of Fibonacci targets and extensions. So that's the futures analysis. So what's next is basically this area where we broke out from. So this area from 41.20 upwards is going to be another area of potential support if we do pull back for the bulls to hold. So really, until this level here goes at 41.01, the bulls are in complete control. All right. So let's do some of the swing trades. And then we'll wrap things up. All right. So let's go ahead. Let's look at Amazon. Sorry, guys. So with Amazon, there was an amazing setup on Amazon that we played. And unfortunately, with Amazon, I did not get filled on this play. But I was watching Amazon 2 weeks ago. You could see here that we had this inside bar close, right? And from that inside bar close, we had a big explosion. So I actually had an order on Amazon to get filled, and it was just a little bit lower than this wick. And unfortunately, I missed this big pop here on Amazon, but we can see that that inside bar was the main trigger, right? So right now we're in this range from 28.70s to 35.60s, and Amazon needs to break out of this range to confirm the next move. Right? So if you're not already in it, it's kind of a tough spot to play because it's in the middle of the range. Let's look at Tesla. So with Tesla, guys, I had an order in Tesla, which I canceled, but this is exactly what I was looking for here. So if we look at Tesla very closely, we can see that we had this double inside bar, and then we broke down, right? But immediately when we broke down, we turned around with this doji bar. So this was a trade setup of a reversal of a bear trap. So here was the bear trap. So the bears tried to short this double inside bar and then immediately got turned around. And I was watching Tesla for a very long time. Specifically, if we take the Fibonacci from this low to the high, you could see that we're hovering around the 618. So very, very textbook setup. And from here, basically, we would have to look at two things. From here, we'd have to look at the opposing leg of the short, which would be here, right? So you can see we're right up on the 618. So these areas are also going to be areas of resistance because it's going to be the Fibonacci of the opposing leg. All right, guys. So NVIDIA, Snow, Airbnb. NVIDIA, just an amazing breakout on NVIDIA. And as long as this low holds of 565, we're going to continue to look for higher highs in NVIDIA. So very, very clean breakout there. Snow. Snow is working on an inside bar this week. So we'll let Snow close on Friday to determine the next steps. But definitely this looks like a very good trade. If this does close as an inside bar to play either direction. Let's look at Airbnb. So if we take the Fibonacci from the most extreme low and bring it up to the high, we could see that we tagged the 50 1, 2, 3 times. So that's why this area here has been a major support. As of right now, you could see that we have a long wick, a bullish wick that's put in. So this wick really needs to hold at around 172 for the bulls to be able to hold these Fibonaccis and continue. If we start breaking down these levels, look for us to come all the way potentially back down to 142.50 to retest that 786 area. X, parts, and Apple. So X, United States Steel, we could see here that if we zoom out, the problem with this stock is that it's not trending, right? So if you look at the other stocks we're looking at, especially if we look at the ones that are doing well, like the Amazons and Teslas, there's a clear uptrend, right? But if you look at a stock like X, you can see that it's kind of been chopping around and moving from one range to the other, back and forth. So it makes it very difficult to trade. What I would do for X, and what I've done before, if you guys can see here, this was one of my old trades on X, is I just really wait for the inside bars. So sorry, I lost it there. I really wait for the inside bars to take trades on these stocks. And as you can see, the last time I took X was a short here, and I took it down for a 1-to-1 target right here. So right now, not really seeing any potential setups because I would rather wait for the inside bars to play a name like X. Parts and Apple. So again, right here, I'm not seeing any particular pattern in terms of an inside bar, but there is a Fibonacci in play here. We take it to the low to the high right here. We can see that we've touched the 786 quite beautifully. So this was an amazing trade to get involved with the 786 right here, guys. Just a limit order with a stop below the swing low. So that's how I would have played it. And I would have already been at least 1-to-1 of my risk. So let's look at Apple. So I am watching Apple. If we look at the daily chart, so yesterday I called out Apple as a potential day trade, right? So I called out Apple because it had an inside bar close. So if we go to the 5-minute chart today, guys, look at that. Just a beautiful opening range breakout, just taking the breakout of this 5-minute bar. That would take you for a long, long ways in terms of profit. And then the next setup we have here is a nice little Fibonacci back to the 50. So Apple was a really good call out that I put out yesterday. And overall, right now, Apple is trying to continue this momentum to get back to the all-time highs. All right. Viacom, Disney. So right now, so Viacom had a huge run, and then wow, look at that. What is that? Wow, that is devastating. So I'm guessing there's obviously some significant news or earnings. So whenever I see a chart like this and I see this type of selling, for me, it's a signal to stay away. But we did also have this inside bar right here, which also, if you shorted it, played out to be a good winner. So right now, not really looking for anything because of this massive volatility. These are the type of names that you want to stay away from just to be safe. Disney. So Disney is just been for the last, if we look at it since February, it's just been moving sideways. Eventually, Disney will break out, but right now it just looks like it wants to consolidate and come back down to this 20 EMA. So Disney, a little bit unfortunate, but that's why we play multiple names and just move on. So Snap is working on an inside week right now. So hopefully Snap can close with this inside bar, and we'll be looking to play that next week as a swing trade. And then Lyft right now is, I don't really see a technical setup, but definitely a potential Fibonacci right here if we take it from the low to the high. Right there on the 382. So you could see that we've been hugging that. So this is a very bullish setup because the 382 was bought. Normally we would pull back to the 50. So definitely there's a lot of buyers in the Lyft market. And this came from that gap up right there. So from that earnings gap up really pushed the momentum for Lyft. But yeah, that's it for the swing trade request. I know that a lot of you are busy. So if anyone's in the chat with any questions about anything, day trade, swing trade, feel free to put that in. The other thing I wanted to talk about was my personal swing trades, and then we'll wrap it up if there's no questions. So let's go to my trade. So this is what I've done so far for the month. ROKU. So I put out a video on ROKU recently, but here's the ROKU trade. And just taking this inside bar up, I was able to hit 1.5 times my money on ROKU. And then on the next one we had was Disney. So with Disney, we took it 2 weeks back and we're able to lock in a partial. We didn't really get to the full target, but we still locked in a partial, which was good. We have Netflix. So Netflix is a trade where we entered right here above this inside bar, and we hit partials on that as well. And then we had Zoom and Chewy. So both of these names we hit partials on today. So Zoom was a nice breakout of last week's range, took partials on there. And then Chewy today had a nice little run. Same thing, breakout of the inside bar, took partials on there. So my swing trades have been working out really well so far this month. And I'm hoping to continue the momentum because March was a little bit tough. Even though we made some money, we were very close to break even. So I'm hoping April is going to be a lot better. And it seems so far it is. But otherwise than that, do you guys have any questions about any swing trades or any day trading setups or anything? Feel free to put that in the chat. Hi, David. Welcome. So I guess what I'll do, I'll quickly talk about the day trades from the week. And then if no one has any questions, we'll call it a night. Sorry. All right. So I want to talk about, let's talk about Monday and Tuesday in terms of the day trades, and let's talk about the opportunities. So here was SPY. This was Monday. And the one thing that I noticed was actually a few things. So the first thing is I had this level, which was the previous day's high. So this was Friday's high, which I had on the chart. So the first thing that happened on Monday is we had this gap fill inside bar, which was a nice, beautiful short. So this was a very simple trade. And then from there, if we draw the first Fibonacci leg, we can see that we pulled back right around the 618, and then we traded to the 272. And this is what I called out on Twitter. This 272 extension ended up being the low of the day. And so far, it's the low of the week. So if you did get involved with this trade over here, guys, you would have made a lot of money. And then in terms of the previous week's high short. So this was a great short because this was also the previous week's high. And what we see here at the previous week's high is we had a lot of resistance, and then we had a nice inside bar. And look how beautiful that short was. and then another inside bar, which was also another beautiful short. So Monday was a very fair and reasonable day. There was a lot of money to be made. And then Tuesday which was today, was not too bad, but the inside bars were a little bit tough. So David says, how can you tell that the reversal started for the first Fibonacci leg? So David, I have a video on what I call the Fibonacci reversal. It's on my YouTube channel. You can check it out. But essentially what it is generally, so you can see here that this reversal comes in at 10:40. So generally before 11 o'clock, there is usually some form of reversal before 11 o'clock. So that's why if we take the fibs and we use the first impulsive leg of the day, right? So this is the first impulsive leg of the day right here, this push down, and that pullback and that trade to the 272 extension. Right here, it's around 10:40, right? So this is why we're expecting a morning reversal right around this time, because anytime before 11 o'clock is prime for morning reversals, and that's why that was a great trade. All right. So today, which was Tuesday, which was a little bit more tricky, but overall there was a few good setups. So you can see here, guys, that we consolidated in this area for a long time. But one thing that I called out on Twitter and that I pointed out is the first push of the day was push up, right? So we can see. So I guess the one thing that I wanted to talk to you guys about today was about timing. So I guess this could be the theme of today's discussion. So timing in the market is everything. If you get a trade in the morning versus taking a trade in the afternoon, there's going to be different parameters involved, right? So in the morning, generally before 11 o'clock, you're going to be looking for some type of morning reversal, especially if you open inside of the previous day's range. If you're gapping up or gapping down, then you can set up a trending day. But normally on an inside day, the first hour, you're looking for the reversal. So that's why this reversal is a good trade, right? And then this trade that I'm going to point out here came at 1 o'clock. So this is called the afternoon leg. So in my book, I go in detail about the morning leg and the afternoon leg. So what the afternoon leg is, it's taking the whole range of the day. So right here was the low and right here was the high. So taking the whole range of the day with the fib and then playing these fib legs later in the afternoon, which we call the afternoon leg. And as we can see here, guys, we had this push up and then we pulled back exactly to the 618. And then from the 618, we had an amazing explosion, right? Look at that. Very, very powerful. So these are why I try to separate the day between the morning leg and the afternoon leg, because there's different setups. And this is also why I love using the Fibonacci, because the Fibonacci is when it comes to indexes and when it comes to large instruments, the indexes and the fibs work very, very well together. So it's been a great week, day trading and swing trading for me personally. I really wish that I didn't get sick because I lost a lot of momentum on my channel. I'm getting sick and it's been kind of hard to recover, but I'm back now and I'm going to continue with my purpose, which is to help you guys to achieve your financial goals. And that's why I'm doing this. You know, we only have 7 people in here today and you know, you guys are willing to learn and I'm willing to help. All right. So that's pretty much it for me. So we talked about the futures market. We talked about a few swing trades and we talked about some day trading strategies, the morning leg and the afternoon leg. Thoughts on Apple with the run up to the next week event. So let's go back to Apple then. I'll discuss Apple. So I talked about Apple earlier, but we'll revisit. So yesterday, Apple showed up on my scanner and it was an inside day close, right? So you could see that I had the arrow here. So this means that on Monday, we traded within Friday's range. So if we go to 5-minute chart, so I was looking for Apple to break out of this range, right? And we can see with Apple, the first 5-minute bar was a big hammer bar. So just taking the opening range breakout of this trade right here at 132.50 would have made a very, very profitable trade. And then the next setup from Apple would have been just taking the Fibonacci from the low to the high and just playing this 50% retracement here. So Apple looked very strong today because with this inside bar, what it means is that we had a day of consolidating. So whenever we have a day of consolidating, the next day is usually going to determine who's in control. And we can clearly see here that the bulls have taken full control. So definitely looking very bullish, but Apple will depend heavily on the overall market as well, the index. So it'll depend a lot on NQ and ES. If the futures market is able to hold strong, then expect all of these names to continue higher and higher. And personally, for me, this has been one of my best months for swing trading. And just when the market gives you opportunities, you have to be willing to take them, and you just have to be ready, right? So I hope that answers your question on Apple. Definitely looking very bullish, but it's going to be heavily dependent on the indexes for sure. I see Tina. Thank you for joining. So do you guys have any other questions? I'm here. You know, we can hang out a little bit longer. I don't care if we have 10 people or 100 people. It's fine. If you guys have any questions about anything. But I guess one thing that I did notice that I wanted to talk about is just looking at the overall market, right? And just going to the weekly chart. So a lot of people are asking, like, when will this bull market end, and like when is the correction coming and stuff like that. So I wanted to share with you guys what I do to help deal with those type of questions. So nobody knows, but we can use technical analysis to help us, right? So what I like to do is I like to look at the weekly chart and look for big bullish candles. So the big bullish candles, as well as hammer candles, are going to be Gyro says, hi Rich, hi Gyro, welcome. The big bullish bars are going to be the major pivots, right? Because if you are an institution, or if you're just a swing trader investor, at this point in the game, many people are trading the weekly lows. They're trailing the weekly lows as their stop loss. So for me, I would not consider a correction or any type of like change in the market structure until this low breaks 40.21. So as long as this 40.21 can hold, there's no reason for the market to turn around, because this is where a lot of trailing stop losses are going to be. And I just wanted to point out something to you guys. So back in September of 2020, I called this to be the bottom of the market. And the reason why I did that was because we had one of those setups that I liked a lot, which is called the waterfall. We had 4 weeks of red, followed by the mid Bollinger Band, which is the 20 exponential moving average. And then from there, we had a hammer bar. So I have the tweet saved somewhere, but I said that at this point, I believe the low of the market was going to be in. And a lot of people were saying that we were going to crash with the double top. But I just want to show you guys the power of honoring your systems and your rules. So for me, my rule was, as long as this hammer with a low of 31.98 can hold, then we will continue higher. And as you can see, we did come and retest the low, but we never broke the low. And that's how I've been able to just continue to play the market bullish, because my rule is until 31.98 broke, that everything would be considered bullish for me, right? So this is what I'm doing right now, is I'm saying we had a powerful bullish bar from last week, and until that low can break, I do not see a reason to want to get out of my long positions. I would, or looking to see if the market will change structure. So this is how you use the higher time frames to help you make decisions. All right. And let's look at MNQ. Just to see, I'm going to point out something very particular in MNQ, well, which is NQ basically. So back on the 15th of March, I pointed out that we had this 2-week inside bar close. And I told you guys, if we can get above this high, that we're probably going to retest the all-time highs. And that's what we did. So please, if you're not using inside bars, please add them to your charts. They add a lot of value. Just by me seeing this inside bar on the 2-week chart, I was able to just make a decision that if we broke this high, we'd probably make new all-time highs. And if we break this low, we'll probably pull back deeper. So make sure you guys have the inside bars on your charts to help guide you. So I always have the inside bars. I always have the fibs. Those are the two things that I always have on my charts to make sure that I'm looking at the bigger picture. Newbie says, I thought we were start of a new bull run. Honestly, at this point in the market, anything is possible. But like I said, I'm going to follow a mechanical approach. And basically, until the previous week's low is broken, I'm going to continue to play the market bullish. Right? So when you trade, you need to have rules that you follow. Because if you don't have rules, you're not going to know which direction to play. And a lot of people have been playing short, and it's been hurting them because they fail to recognize the overall trend of the market. And it's very difficult to beat the market in terms of if the market is bullish and you're trying to be bearish, it's not going to work most of the time. So it's really important to use the higher time frames to help you figure out what direction you need to be playing. If I'm heavily invested in tech or QQQ, should I still be worried about the 10-year treasury notes? So good question, Dirty 56. So for me, like I said, I'm a pure chartist. I don't care about anything else. I just follow the charts. And what I would say is until this low on NQ breaks, that I would continue to be bullish in my personal opinion. Until I start seeing these lows breaking, there's no reason for me to flip the script and be scared or be bearish because the trend is telling me that the market wants to continue to go higher. So I'm just going to play the charts until they change. And if the charts change and tell me to short, I'll be willing and ready to short. So I just look at it from a technical perspective in terms of the charts. I really don't care about the news because if you follow the news, there's news every single day and everyone's scared all the time. And it's just going to lead you to making bad decisions. So you have to have a routine and a process that you follow. Does technical analysis work on ETFs since they follow a group of stocks? I'm wondering if I should chart my ARKK ETFs. Yeah, technical analysis works on anything that has sufficient volume. So like SPY is an ETF, right? The QQQs are ETFs that we use charts to help us make decisions on whether we should go long or short. So as long as the chart has sufficient volume, we use them to find patterns, right? And like, for example, like if we look at the Qs, if we look at NASDAQ, right? Look at this inside bar back on the 8th of March. So we're using, like, let's just take a second to look at these inside bars over, let's just start from here, right? So let's say the technical analysis is we want to play these inside bars long, right? We want to play them long because we're in an uptrend, right? So we can clearly see we're in an uptrend, right? From the beginning of 2020, after the COVID drop, we've been strictly in an uptrend. So let's do a little bit of analysis together, okay? So let's say we start from the COVID drop, which is here, okay? And anytime we get an inside bar, we're gonna go long, okay? So this one does not trigger the entry because it just goes down. But from here, we have an entry. 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 How many trades is that? So this one doesn't count. 1, 2, 3, 4, 5. So 5 trades for the year with inside bars, all profitable winners by just going long. All of them are winners, every single one. So let's just say you took only 5 trades in the year, you follow a system of inside bar trading, and you make, let's say $100,000 on each one of those. You don't have to do anything for the rest of the year. You take 5 trades and you're done. So this is the power of technical analysis, is having a plan and a system that you trust, that you've back tested, and that you can follow, and then applying them to the instruments that you want to trade. All right. So for me, I combine technical analysis with volume and with specific tickers to help me get an edge. How do you develop targets in bigger time frames? So with the targets, there's a few ways that I do it. The first way is just taking a fixed amount of your risk. So let's say I was risking $50 a share, then my first target is going to be $50 positive, right? So like some targets are just going to be based on how much money you're risking. So if you risk $1,000, then the first target is going to be at $1,000 profit. And that's just an easy mechanical way to take profits, right? So just based on whatever you're risking. So just take multiples of your risk. That's a mathematical way to do it. And then from there, just using trailing stop losses, right? So like I said, let's say we took this inside bar here, right? So let's pretend we took this inside bar long together. So let's say we took it together like this. Say we set it up like that. And then we hit first targets right around here. And then from here, what will we be doing? Okay. So from now, when you hit your target, you can just trail. So now you can take your stop loss and just put it below the weekly bars, right? So that's how you stay in trades on the bigger time frames. You trail the actual lows, okay? I'll give you an example of one of the trades that I am in right now. So Oracle was one of my most profitable swing trades last month and this month. So this was my inside bar trigger on Oracle. And after I hit my first target, which was around here, all I'm doing from that point on now is just simply trailing these weekly lows. So just trailing them, right? So that's a very, very simple way. Do you see SPY reaching 500? Right now, I guess I wouldn't say worried, but let's remove these drawings. The only thing that I would say is SPY has been on a crazy run. Like you can see, like, look at these inside bars and these runs. Like, look at this, right? Look at this inside bar back here at 395. And then now we're all the way up to 414. So it's been on a crazy run. And anytime we have a crazy run, we're either going to have a big pullback or we're going to have some consolidation. One of the two things. So I don't know which one is coming. It could be a big pullback. It could be just a consolidation. But definitely the thing that's going to really push SPY, I would say, would be potential news catalysts in the future with the Fed, as well as, COVID. Any other news can really set SPY off right now. So what I would do is, if you guys saw in my swing trades here, that I'm long on a few names here: Roku, Disney, Netflix, Zoom, and Chewy. I'm long on all those names. So what you have to do is lock in profits where you can, because no one really knows what can happen tomorrow. Like during the COVID crash, right? No one knew that was going to come, right? Nobody knew that we're going to drop 20% in like 2 weeks. So when the crash comes, if it does come, it's going to take everyone off guard. So you have to make sure that if you are in long positions, that you do lock in some profits. That's the best thing to do. Lock in some profits. So that way, if it goes to 500, if it doesn't go to 500, it doesn't matter. Just pay yourself along the way. Right? So guys, I really appreciate the questions. Thank you for being here with me. And if you guys have any more questions, throw it in the chat. But otherwise than that, I will be trying to return for Sunday stock talks every single week. like I normally do. And just coming back to the Sunday Stock Talks, it's very exciting for me. I was really, really sick, and I'm still kind of not 100%, but I do really, really enjoy having these conversations and helping you guys with your trades. So from here, I'm going to put together my top trade list tonight, and I'm going to be posting that right after this call on Twitter. And like I said, we had Apple, which was an amazing trade, a very, very, very good trade. And if you guys have any questions about day trading, swing trading, are we going to trade futures live on Sunday? Sure. Yeah, David, come out on Sunday and we'll look at the setups and see what there is. So I'm always checking the setups. It's good to have you back. It's good to be back. Thank you very much. I really am happy to be back. So I'm going to keep doing this every week. And you guys know where to find me on Twitter if you have any questions. My main purpose, again, is just to really help you guys out. Whether we have 15 people or 1,500 people, that's going to be my contribution to the world. This is something that I've spent the last 6 years now studying and learning, and it's important for me to help those that are struggling. Do we sell oldest share first or newer shares? I'm not sure what you mean by that. Are you buying in multiple different levels? Is that what you mean? There's no way to like sell older or newer shares. When you trade something, if you buy shares, right? Let's say you buy shares at different prices, then your average cost is going to increase. So you can't say like I'm going to sell older shares or newer shares. It doesn't work like that. It's you just sell whatever shares you have, right? So if you're buying at different levels, then you will have a new higher dollar cost average, right? So as your average cost goes up, then you want to be planning ahead of what you want to do. If you want to trail, if you want to lock out. But for me, when I do my swing trades, I do not add more shares. I only do one trade for my swing trade. So like ROKU, if the recent video I did for ROKU, I bought one time. Whenever I swing trade, I only buy one time. I never add. When I invest, I always add when I invest. But so I have different strategies for different things. With the uptrend, do you think it's good to increase the risk reward from 1-to-1 to 2-to-1? What do you recommend? That's a good question. That's a really good question. I would say not necessarily increase the risk to reward, because what I would prefer to do is just scale out and leave some on for bigger runners, so if you take off half at 1-to-1 and then you want to leave the other half on for a bigger runner, that's what I would consider doing, but not necessarily moving your target, but leaving more on of your position for a bigger run. So if you have 100 shares, selling 50 shares and then keeping 50 more shares for a bigger run. That's how I would do it. I would always pay myself first. Always pay yourself, guys. Always get in the habit of paying yourself. You'll see your account grow, and that's what's important. It's not important about calling the top or the bottom in the market. What's important is making money and growing your account. And the best way to grow your account is to pay yourself first on every single trade. Pay yourself and then leave a runner on. So leave the runner on so you don't have FOMO. Like for example, like let's look at Oracle. I took off the majority of my position in Oracle down here, right around this area. So if I didn't keep on some, I would be in extreme FOMO right now, right? So that's what I mean by keeping a runner on, because you don't want to be in a trade, take everything off, and then it just explodes without you. Then you're going to get FOMO and you're going to feel regret. So sometimes in trading, you have to manage the psychological aspect. And that's why for me, I always leave something on for these trades. Newbie Sane says, thank you. Thank you very much. No problem. I noticed some of you guys are new to my channel and how I do things, and feel free to ask anything. I'm definitely willing to help you guys out. But like I said, with the shares, if you're going to average if you're gonna buy in multiple layers, that's a strategy that I use specifically for investing. When it comes to swing trading and day trading, I don't like to do that because you can end up with too much size. And if you end up with too much size, then you can do some damage, right? You can do some damage, but it still is a good approach. Definitely, it's a good approach to use a scaling in approach. And I would use that specifically with the Fibonacci. And I actually have a section in my book about scaling in using the Fibonacci. That's the only time I would like to use a scaling in approach. I wouldn't use it on an inside bar. I would, because it just wouldn't make sense. All right. So anything else from anyone? I see that we have 14 people, which is good. But if no more questions, I will be wrapping it up, and we'll get back to doing our Sunday stock talks. And I made good money in this last few weeks, and I hope you guys are doing well too. If you guys aren't doing well, take a step back and really look at your strategy and figure out what you're doing wrong. Are you sizing too much, too little? Are you just randomly trading different things? Make sure you guys have a process in place. So if you're not doing well right now, it's good, because it's a learning experience for you to look at what you're doing and figure out what needs to change. So even if you're not making money, you can still be getting better. And that's the most important thing, is striving to get better each and every day. If you can do that, if you can get better each and every day, by the end of the year, by the end of, a few months, you're going to be 100 times better trader. All right. So that's how I'm going to close it off. Just make sure you have a trading plan, and make sure you are following a system and some type of rule set. And to be honest, any system right now should be making money. And if you're not making money, then you need to really reflect on what you're actually doing and figure out what the issues are. All right. Otherwise than that, it's been my pleasure, and we'll chat again. Maybe I'll do another one before the end of the week, but probably just wait until Sunday, because I know a lot of people are busy during the week. So we went through a lot. And if you're just joining us, please rewatch this video. We went through a lot, day trading, swing trading, everything. So I like to be fully transparent with everything that we do. And I hope you guys enjoy the rest of your night. Thank you very much for joining me, and we will catch up soon. All right. Thank you very much. Good night.